Hey, good morning. Morning, David. Morning, Pat. Morning, Kimberly. Morning, Jason, Patrick, Arturo, Al. Good morning, everybody. How's it going this morning? Yeah, I'm here. Market's moving. First Republic blowing up over the weekend. Who couldn't see that one coming, right? Anyway, hey, morning from Lake Tahoe. Never been there? Heard it's beautiful. Morning, Matt. Yeah, if you want to chat with me, make sure you're a subscriber. Just hit the button and we'll let you chat on the live stream. And while you're at it, you might as well hit the bell for notifications with the doodads. Click all notifications so you get notified when I go live every single morning. And then on Tuesday evenings, I do 30 minutes of awesome, 30 minutes of your requests at the minimum, and we have a good time. So, all right, let's jump into what we got for today. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. This presentation here, intended to be informational, educational, and fun, I hope, is not a recommendation to buy or sell any financial instrument or anything else. So if you desire that personal financial advice, you need to hire and consult a financial advisor that has a fiduciary duty to take care of you and your financial situation. Remember, you can lose all the money you're trading with in a hurry. So please keep your risk in check. Please, please, please pay attention to these things because the account you save may be your own. All right. Moving on. Oh, wrong window. There we go. This one. Check this out. So we just came off of January to April. Today is the first day of May, first trading day of May, first day of May. We just came off of the January to April, which usually has a 13% gain on net. And this is from 1950 to 2022. Then from May to October, we usually only see a 5% gain. Sell in May, go away. Not always the best performance. So May to October, maybe not the best. Then November to December, those 2 months right there, typically 17% in the market. So that's the best 2 months to not miss if you're going to look at the whole year. So we are in for some potential chop May through October. So if you want to get a higher resolution, go down the settings, click the little button, and up your resolution. It'll be less fuzzy. That's all on you. I'm putting out 1080p, so should be crystal clear for most people. Anyway, morning goose. Now another thing, big tech inflows were the biggest since November 22, which what was that, 4, 5, 6 months ago. So in the past 6 months, we just had the biggest tech inflows. That's NASDAQ, big tech. And what does it mean? Well, we came off the biggest outflow since back here in 19. So we have an opportunity for inflows. If you look at what happened back here last time we had big outflows, kind of carried us through. And that was we're not even talking COVID here. COVID would be right here. This was way before COVID. We had the biggest outflow back there late, that was December 2018, 19, right there. And then we went on this run. Are we going to do that again? These things follow a pattern. Typically, after we get a big outflow, we typically get big inflows. And this one, while the biggest in 6 months, is not very big compared to all this stuff back here in the history. Another thing I've talked about on and off for the past, year now, maybe longer than a year, was the money supply growth. We were pushing, this was inflation right there. That's year over year in percent. We had 25% more money right there. And that was on the back of COVID. And still, even after COVID, we were still growing the money supply like crazy, coming in about 12%. But now we have gone negative. This is deflationary for our currency. Suck some prices back out, potentially. And we haven't seen deflationary money supply since this has been tracked since 1959. We got near zero a couple times, but we haven't been negative ever. This is the first contraction in the money supply year over year. We're looking at 4%. Of course, 4% off of a 25% growth. We're just just moving the decimal just a just a little bit. So, but just keeping in mind that this going negative doesn't support higher inflation and more money available for everybody. So this is a contraction in the money supply. First time we've seen that in, gosh, what is that? 40, 60, 63 years. It's a different environment. We've never had this kind of environment before. At least since it's been tracked. So this is the entire history of the money supply growth, and this chart came off of a Bloomberg terminal. I don't have one, but I found somebody that could produce this for me. So, any questions? Yeah, I called those down spikes. Yeah, well, we'll see. We'll see what happens here. We'll see what happens, Goose. So anyway, this is fascinating to me right here. I mean, that's one reason I bring this up. It could be depressionary, and that's true, Jason. But deflationary is sucking money supply out. It has depressions are a whole different critter. I think we're still early on the cycle for going into depression. We're probably going to see another spike in the market, more stupidness from banks blowing out and stuff like that. Even more than getting another bank going bankrupt this weekend. I think it'll get out of control where the Fed doesn't even have the power to fix it. They can't bail people out. They can't save deposits. So that potential is coming. And I think we're going to see a higher high in the market before the wheels come off, so to speak. So right here, let's just review what happened on Friday. We closed at above all that consolidation from early April. Beautiful close. We are testing the high from February. If we get above that, probably going to that 4,300 test from August. And it's all but a lock at this point. Like, it sure does look like it's going to happen. We pulled back, didn't quite pull back as far as I thought we would on that dip, but then we rallied strongly. And I'm thinking we're going to see 4,300. That's what I think. Pretty. Now, remember, we do have FOMC this week. It's going to be a volatile market mover. Here's what we got so far. The Fed funds rate, not updating. I'm not sure why, but they're not really in their target rate up here. The DGS2 kind of coming in right here. And I don't know. It's not looking as strong as... It's just going sideways. Back in January, I kind of threw that theory out there that we may see a sideways. So far, DGS2 is kind of turning sideways. That Fed funds rate, we may see it hold sideways. But we do have that FOMC meeting coming up this week. So right here, pull this back. Got that coming up. What are they going to do? Is it going to be like what, Powell told FAKE Zelensky on the call with the Russians? 2 rate rises and we're done this year? Or are we going to do something else? So right there, the market rate is below the Fed funds rate and kind of turning down a little bit. So could just churn in this area before we go through more inflation and higher interest rates. Right now, it doesn't seem to be killing the construction, housing, transfers and sales have slowed down greatly. Most people that are in a house that don't have to move are not looking to move because you look at what you're paying now and what your money can get you, and you can't even get an upgrade for the same kind of money with the rates going up. You're going to end up paying huge amounts of money just in interest. So the only people that are moving are people that are forced to move in general, or the people that are first-time home buyers, they don't have anything that they're paying on right now. I mean, they're blowing all their money on rent. So buying a house is better than paying rent. I don't know. Moving on. I don't know why all these disconnected here. Let's refresh the list. And jumping in here. Looking at this S&P chart, we came up right to the top of the box, kind of forming off of the body from that February candle. Came up right to the top, just almost about to break out. Again, we push above that. We're probably going to rally up to the top of this 4,300 zone where we topped out back here in August. Now, S5FI, nice, strong recovery. Just still hanging out in the middle there. But I do, these are the arrows I drew. Expecting it to go back up to the top around 80, then probably pull back, then come back up here. That would be a test of 4,300. A pullback back maybe to 4,000, and then a rally back to all-time highs, and just kind of hang out up there as we do that. So it's kind of my expectation, and it sure does look possible in this chart right here. And get a pop up to 4,300, get a pullback back in this area, back to the roadmap line, and then break out. NQ pushing higher than we had seen. Gosh, I mean, that was a higher high there. I think, yeah. Overnight here, gotten a higher high. Pulling back a little bit. That thing's all but got a destiny for 13,800. It's kind of like it got a date with 13,800. Russell smearing it up overnight a little bit. Not showing strength. Probably because First Republic blowing up. But just kind of flat on Russell. Getting a little bit of pullback, but just kind of hanging in here. Right in the middle of the box, right in the consolidation. Couldn't break out higher, couldn't break out lower. More sideways for now is what I would expect on the small caps. Now, if we do break down here around 1672, if we do break out, probably going to rally back to 2000 up in this zone. That's the path for Russell. Now, if you're confused on ES, that's S&P 500. That would be SPY. If you're not sure what NQ is, that's NASDAQ futures. That's QQQ. Divide the price by 41, get QQQ's price. ES, you divide by about 10, get roughly SPY's price. And then Russell here, divide by 10, and roughly get IWM's price. So I track those three as my main three indexes. Now, dollar, still consolidating down here, and looks like we're probably going to break down to the 90s. Nothing changed here. Still showing some weakness. It is finding support, but still showing weakness. It's kind of tightening up the range, which usually means once we get a tightening of the range, we usually get some expansion. It could pop up and down. May go retest the roadmap line one more time. It's been since early March since we did that. So a month and a half. We'll see. We'll keep tuned for more on that one. And this one is also showing a little bit of weakness. It's not going on the run that it looked like it was going to. This one breaks down below the lows. We could see the yen run on down. It breaks out above about 71.50. Could see it breaking on up. So that's interesting right there, because I was on Ask the Pros on Friday talking about Warren Buffett investing in Japan. He sees it as an opportunity, but again, time frame, right? He's usually operating on a 10 to 15, 20-year time frame, not like what we can trade on like this week, this month, next month, 3 months. So when they start having 10-year options, let me know. We can start looking at something planned out further. Now, stuff moving today. Looks like that one got slammed. That's a biotech, pharmaceutical type situation. Obviously had something come out that was not so great and had earnings today, or I guess last week. Got slammed and now recovering a little bit. Just kind of churning in this bottom consolidation. Looks like it's going to make a lower low attempt potentially. I wouldn't touch that one right now. That looks pretty. I mean, that's down, probably more down. HLP, that's a nice pop. Looks like the market just opened. And not enough history to do much. That'll probably come back down if I had my guess. JPM showing a little spike, even on banking weakness, probably headed out to 150. Kind of bounced right here, showing strength, breaking above the consolidation. As long as it can hold on to that, as long as it doesn't break back down today, probably headed out to 150, possibly 157 on the extension there. And then if it really gets going up here where all these fibs come together around 192, you know, maybe stall out only about 175, 180 right there. Then ISEE, nice pop. That's an exponential move. Watch out for that to come back down. Watch out, watch out. Things don't go straight up without coming right back down in general. ON, nice little pop. Still sideways consolidation, not really going anywhere. TMV, bear treasury showing a little bit of pop, but still, you know, the 3x bear looks pretty bearish. It looks like it's probably going to break down lower. And we're doing pretty good holding the line here. But that means treasury is probably going bullish. And treasury bonds kind of holding in right at the roadmap line. We'll break out above 108, probably heading up here. Just kind of chugging. And then LQD, here is corporate bonds. They're actually consolidating above the roadmap line. So potential breakout above about 110. Yeah, something breaking out over 110 could see that come back, and you're like, well, JT, you know, how high can it go? Check this out. Look at where it came from. So that could be a 30% gain just on a few shares, potentially. NanoX, medical specialty NanoX imaging, looks like that one's going toward the garbage, but popping up. Still a lower high at this point. Might reverse my views on it if it were to get above about 1060 there. Otherwise, lower high, lower high, lower high, lower high. Keep on trucking towards zero. APLM. Is that a SPAC? No, pharmaceutical. Sat sideways, had something, spiked it up to 48, then right back down below where it had been for years. And that one doesn't look too hot either. Win. Casinos having trouble breaking out. Probably going to retrace to the roadmap line at some point here. I mean, that's 1, 2, 3, 4. Quadruple top. It can either extend higher, but more than likely it's going to retrace. I mean, obviously it can either go up or down, but I wouldn't look for more than 120 on another pop before we get a bigger, deeper retrace. So expect to find some resistance right there, and then turn down and retrace back like this. Something like that. If it breaks out. If it just breaks down, coming down here. GDXU, 3x leverage. Showing a little pop this morning, but still looks like it needs to hit the roadmap line. GDX regular still has a long way to go down. GLD still has a long way to go down. Not really breaking out at this point. I would expect it to retrace. YGF. That looks like a crazy chart I don't know what to do with. Not enough history, not enough anything. STNG, potential bouncing off the roadmap line. Watch for that one to break back higher. It's going to have to be above 58 for me to be interested in it, going up to this target up here. You know, breaking above 58 takes it to about 64, and breaking above that prior high can take it up to this 68, possibly 73 area up there. AGQ, Ultra Silver. Man, what's silver doing? Nice little pop. This one's probably on a pathway to get to 30 to 35, probably out to next year. did this consolidation before it broke down, pushing up, so be careful. We can see a quick, fast pullback in silver. SLVO, yeah. Silver shares covered call ETNs. Interesting. What's the return on that? 14%. Holy nuts. That one's crazy. There you go, goose. Want to do a cover call on silver? Wow. That's pretty crazy right there. That looks like a big head and shoulders, though, to go lower. That's my only caution. I mean, I guess it could be a head and shoulders to possibly go higher, except it's not quite complete. Yeah, breaking above the roadmap line would be positive, but it's got some volatility down here in the zone. KOLD, natural gas short, showing a little pop, a little bit of green. That means NG1 exclamation points, just consolidating at the bottom. Nothing awesome on natural gas. Not breaking out, not breaking down. Just kind of went back to resting sideways. It's a bummer. I was kind of bullish on gas, but looks like the gas plays over. Interest has waned. Money moved on. AMD potentially breaking out here. That's what called an entry late Friday. Getting higher here, breaking above this. This is like an aggressive entry time for this target. Waiting until it's above 96 is much more conservative. Target 107 to 113. I just kind of drew it in there. It may only get to 107 on that next attempt. The bigger pattern, probably expecting something up around 132, but it'll probably retrace after it gets to about to this zone. So that's what I see moving right now. My bias for the day, circle back around. Not sure what's going to happen. If we can shape it up and get a breakout, we'll probably start running. We can run quite quickly higher up here. And we could be up there in a day or two, up in that 4,300. Today, testing that breakout, just getting slammed a little bit back down. I mean, we'll see what happens, right? IWM. See what we got there. Yeah, just trying to break out. Trying to break out of the box. Looks positive for IWM. All right. Thanks for coming, everybody. We'll be back again with you tomorrow. If you want to keep on getting market updates all day long, join me in Discord. Links in the description. Otherwise, have a great day. We'll see you again tomorrow for What's Moving.